Hey everybody, welcome back to our roundtable this month. I'm super excited for our guest that we have here today. We have Matt Pfleger with Supreme Lending. He's a wealth of knowledge. To the point it kind of makes my brain hurt sometimes, but a super wealth of knowledge in the mortgage industry, the finance industry, so I'm super excited to have you on. Say hey to the people, Matt.
Hey everybody, Matt, nice to meet you.
Tell us a little bit about yourself, and the big $1 million question, of course, is how did we get here? How did we get in mortgage and doing what you're doing?
It's been a hot topic,
yeah.
Right? More me specifically, so I've been living in Cincinnati for about 10, 11 years now.
Mm-hmm. You're from here at this point.
Yeah, I'm the Midwest kind of sucks you in.
Yeah.
So I'm originally from Tennessee, was fortunate enough to play college sports, played football at University of Dayton. Was driving by every time I would go home and saw a big city, and where I'm from is not necessarily that. So I was like, hey, I'll plant my flag here for a little bit, and have been here ever since. Kind of fell into finance. I think real estate's kind of the same way. Like no one unless you have family, no one necessarily starts in that field. And my background was finance, so I basically started learning about the bond market and maybe the boring side of finance, the opposite side of the stock market, essentially. Yeah. So corporate debt, derivatives, things of that nature. But I realized that I'm a little bit more of an extrovert than people that are in that field, where I needed some more human interaction. And I found finance, and it was the perfect blend of, being an advisor. And that's actually one of the things that I'm so excited to talk with you about today. Is I think that's much needed in today's age. So thanks for having us on. I think now is such a fun time to take topics like this, like what's relevant, boiling it down, being an advisor, instead of the other way around, where we have enough negative media at the moment.
Agreed. And confusing media on that, especially in the finance, economic realm. It can be really confusing and really daunting to even try to tap into that information. So
well, that's why these forums are so great, to have more of a long conversation on what's going on instead of reading 10 different websites that could give you 10 different answers. But that's kind of my journey into it, where started as a loan officer. 10 years later, now I'm running a company or a branch here in Cincinnati. Got Becky over here, so she's seeing what's going on today. And we got 10 employees here in the Cincinnati and Columbus area, closing loans and just having fun from there.
Killing it. I like that. Closing loans and having fun. So, and then too, we got introduced through a mutual friend of ours, Victoria, who we both have had the pleasure of working with. I worked with her back in the day at the Woodhouse Spa. It was a throwback. But we were in there together. Then we both started working in real estate mortgage, and she made the connection, and I'm so grateful that she is. So shout out to Victoria.
Yes.
And you're building a team. That's so exciting for you. And tell us just I can imagine it's really rewarding just even get to build little baby loan officers, I guess you could say.
Absolutely. Well, I mean, you mentioned, you hit the nail on the head with relationships. So when I first got started, I was more of a transactional-based business, and that can drive you crazy. You can lose some hair and have some rough days, but
your man bun's killing it.
Yeah, thank you. I got to do it while I still can. I don't know how long this is gonna last.
Live it up.
So, actually, rough couple first years where, you're really grinding your teeth, trying to find the right spot for you. I found relationships, and that's really changed everything. So to be able to do something like this is a lot of fun. Same thing with growing employees, where working with clients, helping them build wealth, very fun, very exciting. But working with employees or helping them take themselves in the right direction and being a part of that growth is so fun.
And you can lend your beautiful knowledge to them and help build into something even bigger and greater.
I definitely try. Yeah, it's all a group effort.
It is, indeed. I love it. Awesome. Well, I'm so happy to have you here. So we're going to tap into some of Matt's incredible knowledge, as I keep saying, because right now, the past 2 years have been crazy, to say the least, and so many capacities. COVID, interest rates are changing every second that we think about it. Inflation, recession. What does it mean? So that's our goal today, is we're just going to break it down and try to make it more palatable for most people so that we can understand what exactly is going on. And shout out to Matt, because he has that finance brain. I was a liberal arts major. We talked about the truth. We talked about rhetoric theory. We did a cute little marketing, PR. I can do all that. But finances, I'm not that girl. But I'm that girl. But I also want to...
Yeah, time out. What is rhetoric theory?
Yeah, exactly.
Sidebar?
Right. This is why we work well together, and that's the liberal arts education teaches us. So the first thing we're going to talk about is obviously the hot topic of, the economy. Interest rates, obviously inflation is kicking everybody right now. And, interest rates are spiking and changing constantly. So let's talk about inflation and what that even means and how that kind of changes our real estate market right now? Really big question, but
Yeah.
I'll get you started there.
Oh gosh. Okay, we could talk about this forever.
I know, right? You can talk about this forever.
Inflation is extremely relevant to everyone's lives. Me and you, everybody watching. Inflation, and we'll talk more about rates, but it is the number one driver of where rates are going right now. If you want to boil it down, inflation can simply be summed up as there's too many dollars chasing too few goods. How did we get here? So we'll talk more about recession and things like that, but how did we get here? Unintended consequences. So the past few years, the government has been trying to stimulate spending. Obviously, we had COVID, so whether people had to stay at home or businesses couldn't open, or even people got laid off, it was one of those things where they tried to keep rates and certain vehicles much lower to stimulate spending.
Yes, absolutely.
And if you go a little bit too far on that, all of a sudden you have too many dollars, and we'll talk about housing, chasing too few houses, too few goods. So inflation's been creeping up over the past, well, especially this beginning of this year.
Oh my God. And
Yeah.
it's like, and that's the thing, I think everybody feels that. And that is, I think, part of like kind of why that fear of purchasing a house comes from, because people are like, yo, I'm already tapped out at my max. You know, I'm already paying rent that's went up $200 the past 2 years. Everything's expensive at the grocery store. Gas is expensive. Everything's expensive. So how do we combat inflation too as just an everyday consumer?
Yeah.
And just to kind of feel some relief if possible.
Yeah, if you want to make it easy, right? If you can have 2 or 3 talking points to make sure you're putting your family in the best position possible, cutting expenses would be the first thing, right? How many times have we seen over the past few years, like you're buying those shoes, you know?
You can cut the Disney Plus, y'all. Like, pick one. You can't have Hulu, Disney, Paramount, ESPN.
Exactly.
You can maybe find something that you can cut out.
Isn't it so funny how all these services, it's actually more than we used to pay for cable.
Yeah, that's the scam of it all. And then they're going to come back eventually and be like, hey, guys, we're going to rebrand cable for Gen Zers. And then it's going to be a whole new thing where people are just paying for cable and maybe dial-up phones again. Who knows?
Right.
They'll come back.
But very simply, yeah, if you could cut down expenses by 10%, all of a sudden that kind of counterbalances that food went up 11%. And so if you can find a way to cut expenses in this market, that would be great. Another thing I think is very underrated in the finance game, and this is where I help clients and people that have that formulated, have a better long-term outlook, is budgeting. It's one of those things that it doesn't take too much, you know, get an Excel spreadsheet, but if you can follow where your money's going, not only to figure out what should you save for, what's the long-term goal, but even short-term, like, hey, should I really be spending money on this?
Exactly.
You know?
Exactly.
And if you can get a rein on that, all of a sudden either purchasing real estate or saving money in uncertain times becomes a little bit easier.
Exactly.
So I think budgeting and cutting expenses would probably be two big things.
And you're so right, because awareness is the first step. You know, I went through that phase. I mean, I'm an Aquarius, so I was like, money's not real. It doesn't exist. Like, it's all like a man-made construct. But as I get older, I'm like, oh shit, it is actually really real.
Yes.
And it's a tool for people to use and get to what you need. And the importance of even having knowing where your money is going is you have to follow it. You know, you have to just understand that. So definitely, and I know it's hard for some people. It's easier said than done. Like, oh yeah, cut 10% of your expenses, like, obviously, but you know, anything is possible, and if you have a goal in mind, anything can get to that point.
Well, that's a perfect segue, because we're here to talk about finance, right?
Yes.
And once you understand more about it or read more about it, we talked about before we started making finance more approachable. What is finance? It's you know, hey, the management, creation, study of how to invest your money, and America's a great place to do that.
It is.
Where you can, if you're taking the right steps, build wealth for yourself or your family, future generations through very incremental steps, or purchasing real estate. Obviously, we'll talk about that, but that's where finance gets fun.
Yeah.
And if we can obviously relay some tips and tactics, that'd be a lot of fun too.
Awesome. Yeah, definitely. And then speaking of finance, like I said, because it can get very daunting. Like, you know, I don't think most people are on CNBC Money, like checking like Wall Street Journal, what's going on. Most people aren't doing that. They just,
I hope not.
No.
You're crazy.
No. And some people, they get a lot of joy in that. But, you know, I think I'm just trying to listen to Beyonce's album for the 20th time while I'm listening on my way to my commute. I'm sorry, I don't have time for podcasts right now. But like this big word of recession has been everywhere. Recession. You see recession, inflation, and I think it's just creating a lot of fear mongering. But let's break it down. What is even a recession, and what does that mean for us?
Very basic definition. Recession is 2 consecutive quarters of falling GDP or negative growth in the economy.
GDP.
gross domestic product.
Okay, thank
so
you. Gotta break it down.
it basically manages everything from inflow and outflow in the economy, right? So if we're creating a lot of net positive for the economy and things are going well, you're going to have a boom like we've had for the past 10 years, right? But obviously when things are getting a little bit tumultuous or uncertain and we have inflation or certain things on the horizon that we'll talk about, there's been some negative growth over the past couple quarters. So are we technically in a recession? We are technically in a recession, no matter the definition that is out there in the ether. But yes, that we are technically in a recession. 2 negative quarters in a row is what we're looking at.
Okay. And you said, we talked briefly, you said you predicted the recession in a way. In a way. I mean, he's not a fortune teller, but looking at graphs and data.
Yeah. Yeah, I definitely wouldn't go that far.
Okay.
But so, and this is what makes finance fun is once you start looking at certain things or reading the right articles, you can start to see a pattern on what's going on.
Yes, trends. Absolutely.
So when inflation's getting very high, there's certain things in the treasury markets. This is kind of getting into the weeds of it. But most recently, we had an inverted yield curve. And so what that means is in the bond market for the treasury securities, a 2-year treasury was paying more than a 10-year security.
Wow.
Usually, that's not the case. I mean, that almost never happens.
Right.
Most of the time, when this happens over the past 158, 200 years, that signals about 85% of the time an impending recession.
Wow.
Because that means that investors don't have a good long-term outlook on the economy, which kind of makes sense, right? So if inflation's at 40-year highs,
wow.
If a lender or any bank or other institutions doesn't have a good long-term outlook, hey, if we lend this money today, will it even be worth that investment or the profit margin that we're banking on 5 years from now or 10 years from now? And if it's not, obviously you're going to have an inverted yield curve, which could signal, hey, the short-term outlook is not as good as we would like to be.
Yeah.
Yeah.
And that's cool. And like you said, the finance gives you that long-term perspective where, and we discussed too, but even before of like, especially millennials and anything, Gen Z, we don't have that long-term outlook.
Instant gratification.
Exactly. It's like, how can I save $100 now? How can I gain $1,000 now?
Right.
And that's, I think, another thing of kind of like changing in directions is the market has shifted so much, even just in the past 3 months, even this past 6 months. But people, the perception, I think, lingers a little longer than reality. So I think right now, especially compared to 2022, 2021, real estate was thriving. Everybody was selling everything left and right. You put a house on the market, you got 20 offers, boom, it's 40 over asking price. Everything is shifted. So kind of with these newer factors, with this inflation, with this recession, with these interest rates, and also too with the housing market. Can you touch on that of how it's shifted and how our perceptions now need to shift with our current day?
Sure. Lot to go on.
I know, I give you lots of information.
So one of the best messages to pass on at this point is, well, actually, what's going on right now? People are a little bit cautious. They're, I don't want to say panic, that's too aggressive of a word, but people are cautious, people are nervous and trying to figure out what's going on.
Exactly.
Right? The biggest terms or things that we've seen recently, people are worried about rates. People are worried about prices. Why is that, right? So rates have been so low for the past 2 years that it's just been stimulating so much purchasing. And, most people, whether it's builders aren't building fast enough, whether it's, you have a new house that you bought in 2019, but you have a 2 or 3% rate, why would you move?
Right, exactly.
So with supply being so low, inflation being so high, hard assets are going to float with the dollar. So if inflation's going up, prices will probably also keep going up, especially with restricted supply. So that's why people are a bit nervous about prices and then rates. But of course, as we'll talk about, there's a lot of optimism for real estate investing right now.
Agreed. And that's the thing. It's never a bad time because it's, like you said, it's an asset. You invest in it, and that's the main asset that most people invest in. And we talk about it all the time. 90% of millionaires were created through the lens of real estate.
Exactly.
And so why wouldn't we take something like that and learn from it as making it our own? And there's tons of ways to do that. And that's the thing. Even on the agent side, we're seeing now things sit on the market I mean, before it was 2 days, 3 days, and then it's gone. Now we're looking maybe like 8 days. All right, 15 days. You're seeing a lot more price drops. Pricing the strategy has changed. Before you price it under to get the people in and then create the bidding war. But now because interest rates are higher, right now we're in about 6% now. It just changed last week.
Just popped over 6% for the first time since June, but then even before that, I think we're at the rates of maybe pre-2009 was the last time we saw rates this high.
Wow, what a time.
Yeah.
And the grand time, I mean, I wish I was there, but but in the grand scheme of things, like we talk about, people in the 80s were borrowing at 13%. Crazy.
Even up to 18%.
Wow.
Yeah, the last time we had inflation this high, rates peaked at 18.6%, roughly.
Wow.
And the Fed rate was just as high. It was about 20%. And we'll obviously talk about that.
I was like, we got tapped into that.
Yeah.
But even just kind of talking on the agent side, like, things have shifted. I think perception, specifically from sellers and buyers, needs to shift as well, because now you have to navigate a different market. The tools that we used 6 months ago, a year ago, are gone obsolete in some ways,
Oh, of course. But that's what's it's super exciting.
He's like, I thrive.
Well, this market right now is very interesting, right? So the
Yeah.
past few years, you've had a problem of, hey, there's 50 offers on this house. How do I get it accepted?
You don't.
Yeah. You have institutional buyers, right? You got investing companies.
Talk
coming
about
in.
that. Touch on that. Institutional buyers. What does that mean?
Yeah. So it's been popular recently, especially with the economy shifting. Hedge funds or equity groups will come into neighborhoods, buy single-family homes, or even maybe the whole neighborhood or the whole building. As part of their investment portfolio. And all that's done, obviously, is take away from the everyday buyer.
Yes.
To make inventory just even a little bit tighter.
Yes.
But in a shifting economy, that is degrading confidence to where maybe the investor or those buyers aren't coming in as often. Or if you have a house that had 50 people writing an offer last year, maybe there's only 2 or 3.
Right.
So as a buyer, you kind of mentioned this. Timing is everything. So whether rates are at 18% or 3%, if you have a conversation with a consultant that helps you understand what you're getting yourself into, whether it's product or budget, whatever it may be, if you have the proper plan set up and you have the triggers set, debt ratio looks good, you have reserves, hey, if you lost your job tomorrow, can you afford this property?
Yeah.
If all those things are set up, timing is your number one indicator of should you buy or not. We talked about this before the podcast started. I mean, the 2007 was a pretty tumultuous time.
Yeah.
Right? Even here in Cincinnati in the Midwest, there were some inverted values where if you bought a house at 200, maybe it's only worth 180. But if you could have bought a house back then, you would have.
Yeah,
because today,
because now
all of a sudden, that asset,
oh my gosh, triple.
with all sorts of things, whether it's lack of supply or inflation or whatever it may be, is now worth X. And so that's we mentioned finance is the long game. So if you can have the foresight and the ability to save and prepare yourself for the monthly budget, fixed in your cost of living, right?
Yes, fixed.
That's a big one.
That's the important part.
So if you're renting, if you can fix in your cost of living, if your rates are at 6% right now, if they go up to 8%, you'll be very, very happy.
Yes.
If they go down to 4%, you already have equity built in. You're the owner of that property. Take advantage and get that lower payment.
Yeah.
But at least you're making the decision when the time is right for you.
Exactly. And speaking of timing, it's like there's so many factors, obviously, on the macro level. But like you said, fixed is the emphasis. Because as a you're renting, somebody's going to come in, your housing provider, your landlord, is going to come in each year and say, actually, let me get $100 more. Let me get $75 more per month. And you got to pay for everything else. And so then it creates this tighter squeeze, which imagine if you had bought 2 years ago, you're still paying the same payment.
Right.
And although you may gain more if inflation is coming, but your biggest expense, which is going to be your living expenses, for most people, it's going to be steady. It's going to be stable. And imagine 10 years down the line, you're still paying that maybe $1,600 a month when rents are $2,500.
Yeah.
And that's the shift, and that's the long-term game that we have to be aware of.
Well, you mentioned the recession, right? So in times of uncertainty, it is wise to put your money in an asset, whether it's something as we joked about this recently. It's whether it's a stamp collection or a hard asset like gold. And real estate's one of those things where it'll kind of float with the dollar, right? So if you could put money into Dogecoin, right?
The Doja Cat coin.
Or the stock market, or just keeping it sitting in your savings account, it's not really doing anything for you.
None.
Now, of course, over the past 10 years, like the stock market's been great, but those weren't uncertain times.
Right.
So if you could find a way to put your money in a hard asset, like real estate, especially when supply is constricted, it's a safe bet for your money long term.
Agreed.
So obviously, I joked that I would do this. I'm gonna put an asterisk on here. Right?
Yes. We have to
news could change, and 6 months from now, this could be an interesting video. But at this point, real estate is even though rates are going up, it matters about you as an individual, and if you have the capacity to do so, it would be a wise
I would
investment.
encourage you to do it.
Yeah.
And too, and that even kind of touching base on the market as an agent, it's a great time to buy because you can leverage the fact that the market has shifted so much. Before you were doing 40 over, you were probably giving away your firstborn child to get a house, But now we can actually ask for things. And there's now a part of agency that has to go in with it where you really have to advocate for your client and knowing what's the market. Okay, I can ask for seller closing costs. Okay, maybe it's better I go FHA instead of conventional because I know there's repairs and I want the seller to pay for them.
Yeah.
And so there's lots of different pivots that now we have to use. And so even kind of talking about that, how would you say that consumers can now kind of leverage the current market to get to those goals that they would like?
Good question.
So I asked it.
Being prepared is always your number one step.
Yes.
You're going to spend $400,000 on an investment. You want to make sure, not only for the sake of making sure it's a smooth transaction, but if you're going to be in a long-term investment, you don't want to look around in 3 years and say, oops, I made a mistake. So being prepared, having discussion with professionals as to what your long-term plans are going to be, whether you're a real estate investor or buying the next 30-year house and they're going to carry you on to Pine Box, right? So you need to make sure you have that plan prepared because it is a long-term investment, and every month you're going to be looking at that payment and making sure this is the right move for me.
Right.
To take advantage of this market, however, right, with inventory being so constricted still, it is very wise to work with a lender who has a little bit of flexibility on how they're going to go through the pre-approval process with you. So something that we do that's a little bit different than some lenders out there. So we will actually go ahead and go through the underwriting process before you ever get into contract.
Nice.
So we'll take all your documents and say, hey, you're self-employed and your 2021 tax returns look a little bit funky, and we need to figure out how those puzzle pieces fit together. We'll go ahead and ship it off to an underwriter, get an approval on it. So when you as a realtor make that offer, all of a sudden we can just say, hey, this is the same as cash closing. All we need is the appraisal, if you're going to get one.
Yeah.
All we need is the appraisal. All we need is the title work. We can close this in 2 weeks. If you're looking at 3 or 4 other offers from whatever company it may be, all of a sudden this one looks a lot better.
Yeah. A lot stronger.
And then that'll strengthen your offer and you can get in the house a little bit quicker.
Agreed. And we've even talked about that too, of like, it's not always about price. Like, people think you want to do the best price, but it's the terms are just as important as price. And
Absolutely.
I've had to have that conversation with myself, even working on the listing sometimes. It's like, price is not always the best.
Yeah.
But if I can get you a cash offer that closes in 2 weeks and I can get you 6 weeks post-occupancy, would you take that, or would you take, but time is money.
Yeah, absolutely.
Especially if the clock is ticking and you're trying to buy another house. So that is huge, that you guys can make that an easy, like you said, same as cash.
Yeah.
More or less. I mean, the speed of cash offers, which is undefeated, 2 weeks, 3 weeks.
Undefeated.
That's dope.
Cash is king.
It is.
And
It
then
is
obviously
indeed.
a big focal point for people that actually already own property has been, how do I find a house before I sell my current one?
Exactly. The contingent, oh my gosh, because writing a contract contingent upon selling a house,
Right.
it's I won't say automatically, but this is not going to be the best situation. So
Right.
then it's that awkward period where I have to wait until I literally close the house
Right.
before moving to buy. And that can be very stressful.
Yeah. Well, 2 things we've done to combat that. We actually have an in-house home equity line product. It's something you can actually use some of the equity of your current home, which thankfully over the past 4 or 5 years, everyone's had record appreciation.
Oh my gosh, yeah.
And as you were joking about, we're getting more to a normal market, right?
Yeah.
Instead
People are like, what is normal?
Well, instead of it's been fun while it lasted, but instead of 20 to 30% appreciation, maybe we're getting back to a normal market of 1 to 6% each year.
Yeah, but a grand scheme of things, 6%. I mean, if you put money in a bank account, how much are you getting from that? Not even a cent, if that. You know what I mean?
Not much.
Not even 1% appreciation, pretty much.
Yeah, and if you can use some of that record equity, put it towards the new house and unlock some of that before your current home sells, that's been a very popular option.
Yeah.
We also allow for recasting, which is kind of fun, where if rates go up to 8%, you don't have to worry about that. Once your current home sells, if you only put down 5% previously, all you got to do is throw the extra chunk towards that property.
Yeah.
We'll use your current rate. We will not set your current rate or
That's
reset.
nice.
And we'll just lower your principal and lower your payment.
Nice.
And then you just enjoy a lower payment without having to refinance.
Which is what most people want.
Yes.
And then too with refinancing, it comes with all these fees and to get a refinance, and sometimes it's not even worth the investment depending on how long you've been in your home.
Exactly.
Right?
Well, it's at least several $1,000s.
Exactly, to even do the
what
fee,
you're doing.
depending. Exactly.
Yeah.
So that's a great option as well.
Yeah.
And so we also kind of briefly discussed like ARMs are coming back. ARMs are like an adjustable rate mortgage.
Yes.
That's a really hot topic. We're seeing lots of that now, where you can come in maybe at, I don't know, 3.5%, maybe 4%. The next year you're at 5%. The year after that you're at 6%. But wasn't that the problem? How was that? We're coming back full circle, because that was the problem in 2007, 2008, how we ended up in a housing crisis, correct?
That is a good question.
Yeah. Like, wait a minute, this looks real familiar.
I would say how this is different than last time.
Mm-hmm.
So you are correct, and we'll go down that avenue of different products that are coming out and why that is.
Yeah.
But how this is different, well, let's even start with, real estate in general.
Yeah.
It usually rises with the market. With real estate, 8 of the 9 last recessions, I think, values have risen.
Wow. That's a stat.
Going back 100, 200 years.
Wow.
The only one that it didn't was 2007, 2008.
Mm-hmm.
Why is that the case? So in 2007, 2008, there was a whole slew of reasons, but one of the biggest ones was that household formations were down.
Mm-hmm.
The population, at least that band of new first-time homebuyers, was very low.
Okay.
Builders were building way more than they should have.
Mm-hmm.
And the biggest key, is that a bunch of people that were wanted to buy houses were qualifying when they had no business qualifying for those loans. So you had things like stated income loans.
So you could just say, I make $100,000 and they would believe you.
Just write it down.
Wow.
Take my word for it.
I promise.
Yeah.
Wow.
I just missed that era.
Okay, good.
So I got it in 2012.
Okay.
That seemed to be a wild time.
Yeah,
and
I
you
can
can
only
understand why that was a problem. So housing kind of caused this in the first place, right? There was a wave of foreclosures. People couldn't afford their payments. Rates are going up. There was adjustables or balloon payments where, hey, if you don't pay this loan balance off this year, give your house back to us.
Wow.
Crazy stuff.
Wow.
Right now is, there's graphs you can watch to track this kind of stuff, is the tightest time, or if you want what the actual graph or the index is called, is the Mortgage Credit Availability Index. So it's harder right now to qualify for a loan than it has been in the past 7 or 8 years.
Wow.
So they've really done a good job post-COVID tightening those screws a little bit to make sure that there's no bad loans going out. And on top of that, you see things like the foreclosure moratorium, right? Banks could not foreclose, or borrowers had the ability to have their payments in forbearance.
During COVID. Yeah.
During COVID. So there were some good measures in place to make sure that there wasn't an overreaction just because of those that negative news. But you got to get my train back on the tracks here.
No, it's okay. It's okay. We were talking about ARMs, and then
yeah.
like 2008 versus now, and kind of
so
what
a little.
the difference
So
is.
that's why it's a little bit different now, because there's not really any bad loans going out. Now with ARMs, since credit availability is so low, they're getting back to opening it up a little bit.
Yeah, just a little bit.
and doing things that have been very, very good. Like they've been working with clients who maybe run their own business and don't meet traditional income standards.
Myself. Real estate agents listen.
There you go. How can we help those people qualify for financing when they have a good down payment, when they have a good credit score, but they don't meet one of the criteria that is normal in the market? Things such as investor cash flow, right? So if you have somebody who's a new investor trying to create their own wealth, is there other metrics you could look at to help that person obtain their goal?
Right, absolutely.
So there's all sorts of things, down payment assistance, I know you've talked about that in the past. All sorts of things that have been opening up in the past that weren't really available over the past 5-10 years.
Right. I know, and now I don't think it's a bad thing. I think just the lending practices have really changed. And nothing that ARMs are horrible. If it works for you, it works for you. And
Yes.
you can maybe get into a house at a lower payment. And I think it's now being used as an incentive on the seller side, where some even programs, I don't know what you guys' program is, but I've even heard of programs where the seller can do the buy down for the buyer, and that way the buyer comes in at a lower rate and then it gradually increases. And if that works for you, but the thing is, it's the education that's important. You know, if you know that your mortgage is going to increase in the next 2 years, don't just spend that money.
Yes.
You know, mentally prepare yourself. Like I would personally pretend like my mortgage was the same the whole time.
Yeah.
And if you can bank that so that it doesn't become a shock when it does hit that, you know, the last leg of that arm. I guess it's a way to put it.
I mean, the point you're making is valid, where no loan program is inherently good or bad.
Yeah, exactly.
However, if you understand how it works, you're going to be doing all right.
Absolutely.
But if you don't have an understanding or have the confidence of where is this going to take me 5 years from now, you could be in for a surprise. So ARMs could be a good idea at this point with fixed rates going up and inflation driving that. It could be a good idea to get an ARM. But of course, you want to understand what that's going to look like down the road.
Exactly.
Does that make sense? Do you have reserves? Can you afford the payment at the maximum payment that you're going to look at? So those are some things you'd want to talk to your advisor about.
Definitely important. It's hence the advisor part. Yeah. We want to make sure that we're educating people. And that's always my goal. You know, I tell people, of course, selling houses is amazing, but I have so much more, and I know you do as well, and that's why we're here, is you have so much more value, and it adds, you feel more, I can't think of a better word. It's very rewarding to give that education piece, because that is, I think, what's missing in a lot of people's transaction. They just buy a house because they think it's the right thing to do. You know, maybe they're in a 30-year mortgage or haven't even considered refinancing, or what does that even mean? Or like HELOCs, for example. You spoke about how you guys can do HELOCs within a home equity line of credit within your brokerage, and that's an incredible resource that some people just don't even realize they have access to.
Right.
And that's what I always say: real estate's a tool to use it and leverage it how you would like.
Well, circling back to finance, right?
Yeah.
It's a wealth creation tool. So whether you're talking to a realtor and getting interested in starting a portfolio, or talking to a lender and trying to figure out how you secure financial freedom for your family. It is fun, and that's what it's all about, which is what we're talking about.
And I love it. So as we're kind of wrapping up, I know we kind of briefly spoke about a lot of different factors. So if you could give consumers advice at this moment, somebody that's interested in buying a house, but they have that fear because we don't know what economy is doing, we don't really know, what kind of advice would you have for somebody that's kind of in the between and maybe wants to move forward with purchasing a home?
Whew, that's a good one. Well, I think going back to the preparedness, that's one of those things that if you could glean anything from this interview or podcast, timing is everything. And if you're looking to invest in real estate, the timing is whenever you're ready. So with the market rates being up, as we mentioned, hey, if rates go up, you'll be very happy you're fixing your cost of living. Circling back, I think we talked about this pre sit down. One of the biggest things that hasn't changed in the past 10 years is builders are just not building enough homes. So if you have a worry about whether your rent's going to go up, or, hey, can I time the market effectively? It's been proven most people cannot do that.
Most people can't.
Even
if
the
we
experts.
could, we would be in a lot different situation.
Absolutely. Yeah. Anyone that says they have that crystal ball,
really.
run for the hills, probably.
Exactly. That's not true.
But when you look at the data and things that I look at on a daily basis, real estate is a very safe investment at this point. We talked about how the past few years have been an anomaly and not normal.
Yeah.
So while appreciation might slow down, your investment's going to be safe.
Yeah.
And if you can afford the payment, then I think it would be a very exciting time to invest in real estate, because competition is going to decrease during this time.
Right.
When times of uncertainty happen, competition for the buy side is going to go down. If you're a seller, maybe you should think about cashing out on that equity that you've earned over the past 4 to 5 years, just because there's not going to be a lot of supply.
Exactly.
So I think if you're going to move, now would be a good time. If you're going to buy, hey, 4 or 5 years down the road, you're going to be very happy.
Yeah, and that's the thing, and I'm kind of battling with that myself, because I'm living with my family now, and I'm like, okay, I want to be out in the next year. Love my family, but I gotta have my space. And it's a conversation of, okay, maybe I should rent for a year. Maybe I should just explore that. But then I'm like looking at the rent costs in Cincinnati. It's making national news. It's up by 33%, something crazy like that.
Yeah. And
so then it becomes that conversation of, okay, if I'm gonna get a 1-bedroom apartment for $1,400 a month, why wouldn't I just get a 3-bedroom house for $16,000?
Right.
So I'm like, I can wait a little longer, and then like you said, it's gonna pay off 5 years down the line when the house is worth $250,000. Who knows what's gonna happen?
Well, even going back to the technical side, right? So if inflation keeps going up, rent, energy, cost of food will continue to go up.
Yes.
Or on the flip side, we didn't talk a whole lot about this, but the mechanism that the Fed uses to control inflation is the Fed funds rate. If they're going to increase that could have a trickle-down effect of some nature to where things like other loans that you might get, other certain borrowing mechanisms you could have are going to get more and more expensive. So either way you look at it, something is going to give.
Yeah.
So if you can fix in your cost of living, that would be a great idea.
And it's peace of mind for that long term. Like we talk about having that foresight.
Yes.
And being able to look at the future. Because
Right.
imagine when, rents are $2,000 for a 1-bedroom and your 3-bedroom house is $1,500, you're going to be pretty happy with
Yes.
yourself. You're going to applaud your, I have those moments where I'm like, I thank my past self for this. Sometimes you're like, I did good. I put things exactly where I knew it was going to be, and it pays off.
Absolutely.
So, and I think that's definitely something we can talk about. And that less competition is, as working with buyers agents right now, I'm thriving. You know, it's like I get to ask you for this. You're gonna fix this. My buyers, and we're in a really unique position that people didn't have before. Although
Right.
interest rates were lower, if you're going $40,000 over for your purchase of your home, what's it where you can get a list price at usually now,
Yeah.
depending.
Absolutely.
On the situation. Awesome. And so we appreciate you. I'm trying to think. We get so much to cover.
I'm sure we missed so much, but
I
it's
know.
such a fun and it can be overwhelming topic.
Yeah, it can be. But
So-
you made it so easy and palatable. So
Yeah, I'm really happy that you had me on.
Yeah, I'm so
it's
excited.
been a lot of fun.
I know. I'm so excited. Many more. I know. And we'll have you have so much information, and I would love to even potentially come back a year from now and have a Matt. That'd be a good idea.
That would be fun.
Yeah. We can have you be our forecast. I don't know, our mortgage forecaster. I don't know, the breakdown. I think that would be really dope. So we
Yeah.
can maybe do that and see just the difference of last year compared to this.
Yeah.
We can sit on the same blue comfy couch.
You can give me a high five or I'll take my lashes,
Exactly.
How do we do?
Yeah, exactly. We'll see how we do. But and then also let people know where we could find you. If
Well,
they want more
so I live
information.
right down the street. Shout out to Symposium.
Yes, we are also at Symposium, #not an ad. We are at Symposium Cafe in Walnut Hills. It's a beautiful space with big, cool, furniture. It's a coffee bar, a wine bar. They have some fire pimento cheese toast.
Yes.
That's my ad for that. But yes, so you live very local.
Walnut
You're-
Hills,
Walnut
great
Hills,
neighborhood.
beautiful neighborhood.
And then our office is downtown, but in finance, real estate's a little bit different, right? You got to be hyper localized. But with lending, as long as you know the laws and what's going on in different markets, then you're able to do financing anywhere. So our team mainly focuses on the tri-state area, but if you're going somewhere or coming in, we can help you.
Yeah, we can definitely help you. And then email, phone, if you want to do all that. Instagram, do you have contact information? Or I can always put it in.
Yeah, not a big social media guy.
Wow.
Funny enough, yeah.
I mean, you're probably as lenders, it's not as fun. Agents have to be on TikTok looking cute and stuff.
Yeah, I mean, there's no way to put finance on HGTV.
No,
I'll
I
tell
make
you
it
that
fun.
much.
You
Yeah.
can't make it that sexy.
But yeah, you can find our team. I'm sure you'll put my name in here.
Yes.
But yeah, Pfleger at supremelending.com. But yeah, you can always reach our whole team there, and obviously we'll put you in the right direction to accomplish your goals.
Absolutely. Thank you so much for being here.
Absolutely.
I'm so excited.
Yeah,
I'm
it's been a
excited to
pleasure.
see. It's a joy to have you, and hopefully it was all really good information for everybody. And so we appreciate you guys tuning in. We look forward to our next one. Take care.